Accounting is the language of business, providing invaluable insights into a company's financial health and performance. Within the realm of accounting, one crucial task stands out: bank reconciliation. This process ensures that the bank statement and cash book align, giving a clear and accurate picture of a business's cash position. But have you ever wondered how to navigate the complexities of bank reconciliation effectively? How can you ensure that every transaction is accounted for and discrepancies are resolved? In this comprehensive guide, we will unravel the secrets of bank reconciliation, equipping you with the knowledge and skills needed to master this essential accounting practice. Let's embark on this journey together and unveil the keys to success. Unlock the secret to financial success with Kountin Koins, where numbers come alive and your accounting game thrives. In this video, I'm going to walk you through the process of doing a bank reconciliation in 7 simple steps. But hold on tight, because I'm not just going to give you a quick overview. I'm going to break it down for you and explain each step in detail. By the end of this video, you'll be a bank reconciliation pro. Alright, let's get down to business. Picture this. You have your bank statement on one side and your cash book on the other. Ideally, the closing balances of these two should match perfectly. But unfortunately, that's not always the case. That's where bank reconciliation comes in. Its purpose is to ensure that the bank statement and the cash book agree with each other and give you a clear picture of what's going on with your finances. Now, let's talk about the 3 main reasons why the bank statement and the cash book might not see eye to eye. First, we have omissions. These are transactions that appear on the bank statement but haven't been recorded in the cash book yet. They can include missing receipts, interest received, bank fees, and even those pesky bounced checks. Next up, we have timing differences. These occur when transactions are recorded in different periods in the bank statement and the cash book. The most common timing differences are deposits in transit and outstanding checks. Deposits in transit are those sneaky cash inflows that you've recorded in your cash book but haven't yet appeared on your bank statement. On the other hand, outstanding checks are the ones you've sent out, but they haven't been cashed in by the recipients yet. Last but not least, we have errors. Yes, the wonderful world of human mistakes. These errors can be made either the bank or the accountant preparing the cash book. It's always fun when someone messes up, right? But don't worry, we'll track down those errors and make sure everything is sorted out. Now that we understand why discrepancies happen, let's talk about why bank reconciliation is so crucial. It's not just about making the numbers match. It's about keeping your books up to date and getting an accurate view of your business's financial health. Plus, bank reconciliation allows you to calculate the true cash balance of your business, which takes into account outstanding checks and deposits. Knowing your true cash balance is essential for making informed decisions and keeping your business running smoothly. Now let's get to the juicy part: the 7 steps of bank reconciliation. But before we dive into that, let me introduce you to our fictional company for today's example. It's none other than Horizon Enterprises. Picture a dynamic organization at the forefront of sustainable energy solutions, revolutionizing the way we power our world. As we accompany Horizon Enterprises on their financial voyage, we'll uncover the secrets of bank reconciliation and witness how this process plays a vital role in their quest for financial transparency. So, are you ready to join forces with Horizon Enterprises and unlock the power of accurate financial management? Let's set sail on this exhilarating journey through the world of bank reconciliation. Step 1. Get copies of the bank statement and cash book for the period you want to reconcile. These reports will be your trusty guides throughout the process. Step 2. Set up the bank reconciliation template. Picture it like a magical spreadsheet or a piece of parchment if you prefer the old-school vibe. Divide the page into 2 columns, one for the bank statement and one for the cash book. This template will be your guiding light as you navigate through the twists and turns of bank reconciliation. If you like this video so far, please give it a like, subscribe, and let us know in the comments what you would like us to cover next. Now back to the video. Step 3. Tick all the matching transactions in the bank statement and cash book. These are the transactions that agree with each other and don't need any further action. We'll mark them off to avoid duplication and confusion. Step 4. Calculate the adjusted bank statement balance. This is where things start to get interesting. we'll look for deposits in transit and outstanding checks. Deposits in transit are those sneaky cash inflows that have already been recorded in your cash book but haven't shown up on your bank statement yet. We'll add those to the bank statement side of our reconciliation. As for outstanding checks, we'll deduct them from the bank statement since they've been recorded in the cash book but haven't been cashed in by their recipients. Step 5. Calculate the adjusted cash book balance. This is where we'll hunt down the omissions and errors lurking in the shadows. We're on the lookout for missing receipts, interest received, bank fees, and bounced checks. We'll adjust the cash book accordingly by adding or deducting the amounts to ensure everything is accounted for. Step 6. Check that the adjusted totals match each other. This step is like a grand finale where we bring everything together. We need to make sure that the adjusted bank statement balance matches the adjusted cash book balance perfectly. If they don't match, we'll have to go back and retrace our steps to find any errors or missed adjustments. But fear not, with our attention to detail, we'll make sure everything lines up perfectly. Step 7. Prepare the necessary journal entries. The final piece of the puzzle. Once we've completed the previous steps and ensure that the bank statement and cash book are in harmony, we need to update the general ledger with the necessary journal entries. These entries will correct the cash book balance for the current period, so we won't face the same adjustments in the future. And we did it! 7 steps to conquer bank reconciliation. Can you believe how far we've come? I hope these steps have empowered you with the knowledge and confidence to tackle bank reconciliation like a pro. Remember, practice makes perfect, so don't hesitate to dive into your own bank reconciliation adventures. Throughout this journey, we've demystified the process and equipped you with the knowledge and tools to navigate through the 7 essential steps. From understanding the reasons behind discrepancies to ticking off matching transactions and making necessary adjustments, you now possess the expertise to ensure that your bank statement and cash book align flawlessly. Remember, bank reconciliation not only brings harmony to your financial records, but also provides a clear and accurate snapshot of your business's true cash position. By following these steps diligently, you'll be able to identify errors, rectify omissions, and maintain up-to-date books that reflect the financial reality of your enterprise. Now, armed with the power to prepare journal entries and update the general ledger, you can confidently tackle bank reconciliation with precision and finesse. Stay vigilant in your quest for financial accuracy, and don't hesitate to seek clarification or assistance when needed. As you venture forth in your accounting journey, continue to explore the vast world of accounting basics and stay tuned for more valuable insights and practical guidance. Remember, the realm of accounting is ever evolving, and by honing your skills, you'll be prepared to face any financial challenge that comes your way. As we conclude our exploration of bank reconciliation, I'd love to hear from you. What challenges have you faced in your own experiences with bank reconciliation? Do you have any tips or tricks that have helped you streamline the process? Don't forget to comment below with your thoughts, questions, and accounting victories. And make sure to hit the subscribe button and turn on notifications. So I'll see you in the next episode of Kountin Koins. Happy accounting!